Welcome everybody to another 144 and 360 update. This one is going to deal with a 38.2 retracement and the 23.6. Last video we did was on 61.8, which can cause consolidation area and wider swings, and 78.6, which can end and start a lot of bull markets, plus also cause some pretty wide swings. Now, dealing with the 38.2% retracement, this is what we like to call the golden rule, and that is that it's the single most important retracement, and the level we use for the golden rule is that 38%. This being any market that is going to keep its current trend must hold 38.2%. As long as it does, the trend will continue and it should make new highs/lows from that retracement. There are subsets to that, but that rule, but we'll just deal with the exact way, or the key way that it should work. We'll do other videos on what to look for when things don't quite go the way they're planned, and how to deal with that. Now, the 23.6% rule is that extremely strong weak markets will only go 23%, and this is typically a runaway market. So we're going to take here the weekly nearest chart on the 10-year notes. And we start with the contract, or the all-time high, and we can see that the first bottom that they made was in here that produced any kind of rally. So where did this market go? But 38%, telling us that the market should go for new lows and to keep the trend negative. Now, it made those new lows, and then we take the retracement down to the next low that stands out here, and you see here that this rally could only go 23.6%, again telling you a very weak market. And a pretty decent break happened right after that, again looking for those new lows. And then once we got them, the next attempt to rally went right here, again 23.6%, and again a very sharp sell-off from that, as you would expect when they can only go 23.6% back. Now the next one, next bottom here, once again 23.6% is all they could do. Yes, they can trade above it, but once they're back below it, you know what to be looking for, and that's the new lows and an accelerated move once again, because it was only 23%. So what do we have now? We're just looking up here at this level, about the 16.5 level, to say this could cause the next good move down, or some things are changing. When they are, we'll start to see that this market starts to hold 38% on the setbacks. This is yet to happen. Our next example here is going to be the US dollar, and we're going to go back to, we'll start this one, well, initially we'll put it on the weekly scale, and you can just see back here all the way to 2020, 23% new lows, 23% new lows. Then you start to see in smaller moves 38.2, then it goes to 78.6. Now that deals with our previous video, in that could end the bull market, or the bull, or start the bull market. And in this case, it ended, it failed to make that new low, went up 23.6, got through here quite a bit, but then once it started going back down here, we held 38 back up. And that's just, there's minor trends within the bigger trends, and that's why we say we watch all the retracements, regardless of what the longer term ideas are, so or targets are. So in this case, we trade down, we don't make a new low from over here. Again, we're at 78.6. Now I want to take this just to the daily chart for a little clearer picture, daily nearest, and we'll squeeze this out some here, get it all in, and let's see. Now the thing that I wanted to show you here is what you have to watch out for. And that is that, what's the level you use. So in this case, we're drawing here to here. Okay, so this break comes down here, doesn't make a new low, but any retracement in under this high has to go back to this low. So because it's been higher, that's the point. It's been higher than that, so you can't use that right now. So when we take this back here, we go, to this high because it's still to this low, 38.2%. Now, possibly a trend, we've got some direction here. Now we take out that high, so now we can go back to this extreme low, and then what do? But we hold 38%, just as you would expect, onto new highs. Then you get a move here where now we're starting to only be able to come back to 23.6% and still looking extremely strong. Again, these are just trend identifiers. This is what you're dealing with. This is exactly what's happening here. So, and it's all measurable. It's not, you can have a moving average, maybe catch, but look at all these bottoms you're catching. I mean, every one of them is coming into a retracement. And that's all we're trying to explain with all of these videos that we do, that you have to know where these points are. And that in my well over 40 years of dealing with these markets and market analysis, this is the best thing that there is to use on there that I know of. Okay, so there's 23% again, set back here into 23%, new high, again, 23%. Now you can get to where you see here, this market's so strong that it can't even get back to this 38%. So what do? We take another retracement and we take the next lowest low, or the most important low in all of this area is right here. Retrace back up. What do we see? 38% holding there. So the market's just even getting stronger, that it can only retrace back to the shorter term lows. Now we get back to the extreme low, 23.6%. Again, off it goes. Then once again, 23%. I mean, these are levels that you can identify well ahead of time and know what the potential is. New highs, okay? Very simplistic, but very dynamic. Up in here, again, 78.6% rule. You have to go back to our other video, but again, it did end the bull market up here. And then you start to see that it holds 23% on the way down. Then again, 23% stayed well below it. And you'll just have to run all the retracements from this high down to this low to see what you're going to deal with next. Now, one thing I wanted to just show you in the grains here is going back this one's daily continuation, going into the January beans that expired here, and now we're looking at, but just what happened here back in July. This was 38 back. Now, this is why you have to know where the bigger levels are and where the short-term levels are. In this case, this goes back to a 2020 low, and again, it holds 38% of this high and that low back there perfectly. And then this brings us into the previous video, which is all these 61.8 retracements, 78 to 78, 61 to 61, and yet still, in the big picture, everything is very dynamic for the upside because we're staying above 38%. Still looking for new highs from the one that they made back in June of this year up here. We still think that should be taken out until this level is. Now, all of these levels shift into the March and into, the May and July and all that. So, but that's the service we offer, and that's the Grains Weekly. Hopefully, if you trade the grains, you'll take a look at us, give us a try. And we also post a lot on barchart.com. You can go there under their commentary section. You can click on the follow button so that if anything that's there, you will get a notice that we've posted something new. We hope you like the video. Give us a thumbs up. Subscribe to our channel would be better. And most of all, if you do trade the grains, please give us a look at for our premium members. You can go onto our website and find it under the grains tab. So until our next video, where we'll explain even more about how these retracements work and the subsets of rules to them, the last two videos we've just done, meaning this one as well, we want to get to just the basics of what you should be looking for when using the retracements and the 144 guidelines. So until our next video, thank you for watching and keep looking for us.